Welcome back, everyone. Next up, we have ShiftPixy Inc. It trades on the NASDAQ under the symbol PIXY and is a disruptive human capital services enterprise revolutionizing employment in the gig economy by delivering a next-gen platform for workforce management that helps businesses with shift-based employees navigate regulatory mandates, minimize administrative burdens, and better connect with a ready-for-hire workforce. Please welcome its president, CEO, chairman, and co-founder, Scott Absher. Welcome, Scott.
Thank you, Anna. Good to be with you, and good morning, everyone. I appreciate you taking the time with us this morning. So our business is gotten very popular of late, largely because most people didn't pay attention to human capital. They didn't pay attention to the workforce in the U.S. until now. And a lot of that, and I'll go through that some of the causes for that in our presentation. But right now, the U.S. workforce is in a little bit of turmoil, and we're not the only ones talking about this. You're hearing about this on all the every business outlet in media has stories about what's going on in the human capital market. So we're going to talk a little bit about that. The first wave, what we consider the wave of disruption in the human capital market, started in September 2008. Most people connected to the capital markets will remember that time very well. That's when the mortgage market collapsed and the collapse on Wall Street. But what emerged from that conversation or in those events was a very interesting statistic, a very interesting data point that the Department of Labor started to track. And they called it underemployed, and they had a number for that. It was 8 million people that were underemployed, and so the idea was that maybe they weren't getting enough hours on their job, maybe their project demands were diminished, and so these same 8 million people would have to scramble to try and reconstruct their income. And the old tradition was that to do that, you might go to work for a restaurant or retail or 10 bar at nights or weekends. That sort of thing to reconstruct your income. But what most people don't pay attention to is a few short months later, Uber is born in March of 2009. And this is a situation where opportunity meets despair. Now this population of 8 million people that had to find a way to reconstruct their income could now do so by just flipping on their mobile device. And as soon as this event took place, it kind of changed the human capital universe. And that change also drafted with the rapid adoption of smartphone technology. And what it created for us in this first wave of disruption was the gig economy. Now, people that were dedicated to working part-time or looking for a side hustle could do that with just flipping on their mobile device. And that completely changed the landscape for people that were brick and mortar operators that relied on flexible or part-time labor. And so the restaurant industry is a great example of that, which is where we've done most of our work. This new type of gig approach has really changed the labor markets for them. And this has ushered in this rise of independent workers, where you get about 24% of the people that work independently would use one of these platforms to connect to work. It's estimated in a couple of years, by 2027, about 51% of the U.S. workforce is going to work independently and quite likely operating through one of these platforms. And so far, we've got a U.S. population of about 57 million that consider themselves self-employed. When we looked at the marketplace and the problems and where we might be able to create a solution, we looked specifically at the part-time labor market in the U.S. There's about 30 million people in the U.S. that work part-time. That's either in restaurants, retail, or temporary staffing. And in this market that we serve, we monetize this at about $20,000 is the average annual salary on our platform for somebody that does shift work. We call them shifters. And to us, that presents about $1,200 per year of gross profit per shifter on our platform. And we think that our technology has now really arrived at a perfect time, because now with all the upheaval in the labor markets that really now attributed to COVID, that there's no better way to reach people than on their mobile device and in their in a mobile ecosystem. The whole thing that we're trying to do with this platform approach, and I think it's important to note that everybody that operates on our platform is operating as a W-2 employee. ShiftPixy is the employer of record. And what we're trying to do with the technology, though, is to try to really meet the new demands, the on-demand demands, if you will, of this new workforce, and to create an environment where they can have independence, but also earn extra income, and then access opportunity anytime, anywhere. Again, these are all part of the new ethos for the new workforce in the U.S. And the reason this matters so much is because of post-COVID, we've got several waves of disruption, starting with the gig economy, but through COVID and then government relief, it's really broken the labor market, and it's become very inefficient. And it's been almost impossible for employers now to attract people. They can't find and keep people. And we hear these stories over and over and over again. In the work that we do, particularly in the restaurant industry, it's become to the point where brands that were used to being open 24/7 can't do that anymore. They can only maybe keep one shift open because they don't have the staff for it. So it's a very important timing for everything that we're doing in the marketplace. And the way our system works and our platform and our engagement works, it's really designed to really relieve people that are employers from some of the administrative duties. That's one of the bonuses of our ecosystem. But it's also to allow them to create real-time connections by both stakeholders, the people that are doing the shift work and the people that need the work done. And it's all designed around this new gig economy to harness an opportunity and keep all the stakeholders fully engaged. What we tell a restaurant operator as an example, they talk about all the things that swirl around their business, all the duties they have, especially with regard to being an employer. Our engagement suggests that you can shift those duties over to us and really focus on your core business. The other thing that we talk a lot about is the idea of being able to have a live, local, on-demand workforce. The fact that they can't find and keep people, and the fact that they generally will not employ anybody for more than 30 hours a week, it's still a population that needs a 40-hour-a-week income. So they're all working someplace else, trying to fill out their income needs. Our idea is that on a common platform like ShiftPixy, they can share employees in a local geography that are essentially doing the same work from one location to the other. But again, there's some strong headwinds here that have created some upheaval for any operator, any business that's reliant on part-time labor. Not to mention just inflationary and recessionary headwinds. But now you're seeing engagement drift. One of the things that happened after COVID was they let a lot of these restaurant operators would let people go, and they didn't come back post-COVID, and that continues to be a problem. The other thing that we're seeing is kind of a digital indifference. In other words, in the job provider market, they don't understand that today the only way they're going to meet people is not with a help wanted sign. They're going to have to get digitally engaged to meet people where they are on their mobile device, essentially. And again, this kind of frames what we call the second and third waves of human capital markets disruption. COVID created the separation that I described. The relief that came after that created another reason for separation. But even in the midst of all this disruption, we actually think that this disruption is a good timing for us just before restoration, because we happen to believe that restoration of this workforce is just around the corner. The other thing that we discovered on our journey, especially over the past 2 years, we were looking at M&A in the temporary staffing markets as a way to grow and accelerate the growth of our company. But we also wondered, was that really the best use of capital? And so what we looked at was, after all the work that we have done over the past couple of years on the M&A side, we thought maybe it would be better for us to deploy a blended sales force and not just go after for clients that are in the restaurant or fast food industry that are the bulk of our clients today, but we have an opportunity to take our technology out to a marketplace that's really starving for real-time data, and that's the industrial staffing market. What we learned in our work over the past couple of years is that our technology is not out there really in the marketplace. Nobody's doing what we're doing, and we have a really high value to people that are temporary staffing buyers, which also brings us into really the Fortune 1000. And what we learned over the past couple of years is that the Fortune 1000 rely on flexible staffing as a means to keep their business operational. And so we saw that our technology would actually delight them and create better engagement for all the stakeholders in temporary staffing. So you may have seen an announcement last week about what we're doing with our blended sales force, but we're going after this Fortune 1000. And again, we've got the technology that they haven't seen, and we think it's going to be a game changer in the marketplace for them too. And why we like the staffing industry is that, the fundamentals are very strong. We're seeing that despite all the things that you hear about layoffs, especially in technology companies, that what we're really seeing is more a move away from fixed overhead, especially for, say, manufacturing and retail and big box retail. What they're trying to do is move away from that large fixed overhead and go maybe on another area in the budget to more agile or flexible labor. And so what we've seen over the past couple of years is that this market keeps ticking up in a very positive way. So it's a great time for us to be jumping in here with our solution. So what you're going to see from us is initially we're going to be going after a lot of the well-known names in industry and in retail. And so we'll start to be popping up in some of these well-known places with rather significant or very meaningful contracts. The other thing that we're doing is this technology that we've built, this mobile technology, has allowed us to bring a kind of a superstructure into the marketplace that doesn't exist. And when I talk about this, what we're doing is leveraging our technology in such a way that we're now meeting workers where they feed, where they live, and that's on their mobile device. Nobody else is really attracting and capturing. And we've been testing our technology since early this year. And we've built some really interesting use cases where one of our clients may have had, for example, we had one in Seattle that had 500 openings. Within a few weeks, we had curated over 600 applicants that wanted to go to work for them. And that was a speed and a fulfillment speed that we have never seen in the marketplace. And we're building a lot of those use cases. So, and it's a little complicated in how we do that, but we're essentially meeting these workers where they are. They're not working the job boards anymore. This level of labor does not really. They don't do that. They're not tracking work this way. But when they are looking for work or curious about work, we're one of the first things that they see on their mobile device. So it's created a very interesting way for us to curate a workforce in a very rapid pace. And again, part of this is the whole goal here with the human capital markets today. You must put yourself in a position to be agile. And that message is getting out to not only the restaurant operator community, which I have a webinar next week with QSR, who's a publisher to the fast food industry. And this is top of mind with them is I can't find people. So we're going to show them our tools, how we find people, how we curate people, and how we can put them to work instantly for you. And we're really leveraging some of the most elegant mobile technology in the marketplace today. And again, what we're trying to do is build not just better connections, better controls, but through this process, we're actually able to demonstrate a much more valuable proposition for stakeholders at the staff buying end. If it's a restaurant operator or restaurant chain, or if it's say, a Walmart or a Target that use temporary labor. We're trying to bring them the best technical value and the best staffing opportunities in the marketplace today. And what we're actually seeing with this combination of our traditional business strategy and this new strategy, it's actually allowing us to build a much better margin and revenue production for our business overall. What we see, if we dial this in correctly and we get things locked in the way we think we're going to be able to do the first of the year, we see this as an opportunity to really accelerate our growth and profitability. And to kind of point that out, this where this new blended product offering takes us is that same population that we were going after. Instead of our average billing coming in at $20,000, now our average billing comes in at $26,000 per worker. And because of how we're positioning the company and the product offering, it actually allows us now to produce, instead of $1,200 a year in gross profit per worker on the platform, we're now able to produce a blended $5,200 per employee annually on our platform. So the impact is profound from a profitability standpoint. And then when we look at our cohort in the human capital space, if we're successful in meeting our goals next year, we're probably, from a market valuation standpoint, we'll be a participant in this cohort. At the lower end, to be sure, it's going to take us more than a year, but we will be a part of this cohort in terms of comps in the market. And with that, I'll wrap here and leave a little room around the edges for Q&A.
Excuse me. Great job, Scott. All right. So, Brian Boyce, one of the most attractive things to investors about ShiftPixy is the high insider ownership. So what percentage of the share structure does Scott, Absher, and other management own?
I'm the largest shareholder, and I think I'm around 90%. So, for all intents and purposes, we're almost a publicly traded private company. But what's interesting, and I always share this with caution, we have a very small float. I think there's less than 400,000 shares in the float. So it's an investor should look at that very cautiously, because it creates some volatility sometimes, having that smaller float.
Right on. So Linda Anderson asks, does the issue that Uber, Lyft, and others may be forced to take their independents on as employees, and the fact that they are giving them schedules, have any effect on your platform?
It actually validates our platform. This is something from our inception we knew was coming for those. We've been, I've got 30 years in the human capital management industry, and I've grown up around and with all the settled law regarding how an employer is supposed to conduct their actions with employees. And I had predicted early on, when we even on roadshows on Wall Street, that someday this is going to have to come to it. There's going to be a day of reckoning. And in fact, somebody asked us early on, said, well, how quickly could you fix Uber's problems? I said this instantly. So the day they became a client, because everything changes on our platform. So I think that this is kind of long overdue. This, again, it validates our concept of W-2 or non-contractor type of labor. And I'm glad to see that they're moving in this direction. And it doesn't impact us negatively. It actually supports everything that we're doing in the marketplace.
Great. Good to know. Dave Adams wants to know, how does the pay vary on an hourly or weekly or monthly rate? How does that vary for employers using your platform versus having a full-time W-2 employees?
It's essentially the same. Full-time W-2 or they might pay a small premium. For example, one of the examples that actually drives our profit is that there are some clients that just want to use our workforce to fill in their shift gaps, and we're fine with that. We ratchet that up our margin on that is pretty significant. But what we're seeing is they want to try and come to a blended relationship with us, where we take over their current workforce and run them on our platform, but we also keep their bench full. So that compromise brings us a lot closer to what their normalized W-2 wages would be. So for us, it's kind of for a client, all we're doing is really codifying their real fixed costs, and generally in that middle ground that I described is about what they're paying for all of this overhead anyway.
Kyle Buist asks, what happened to AXH, Industrial Human Capital, and is ShiftPixy still going to upstream?
On both of those, upstream, we just went through a registration process with the SEC, a very difficult one, in my opinion. And one of the things that came up was they did not really care for our sponsorship of AXH, as it had some impacts that they believed put us into a more of an asset management type of a company, a 40 Act company. And so with that, we decided that it's probably smart of us to unwind that, and it did please the SEC that we unwound that. So that process was completed just a few weeks ago. And now we seem to be in good stead now with the commission on that. And then with respect to upstream, again, in the same registration process, there were a lot of questions that you could see were coming out about that from the commission, and so we thought that it was probably best that we just unwind what we were getting ready to do with upstream there. And again, the combination of those two things actually put us in a good position and at peace with the SEC.
Great. Kyle Tran says, you mentioned some big names could be using your platform. So can you go over, for example, how a company like Best Buy or Amazon might use your platform?
Yeah, that's a great question. When you look at a company, or you're a shopper at a Best Buy or an Amazon, what was interesting in the work that we've done over the past 2 years, and we've seen the types of clients that were relying on flexible labor, this temporary staffing scenario. Almost every big box retailer that you can imagine, every big name in e-commerce that you can imagine, were all clients of some of these companies that we looked at. And so it was clear that this is a fixed, actually a fixture in how they run their business. But what we also saw was that nobody was given these types of clients real-time human capital data. They were not capable of doing that. And now we're in a position to be the first to market to really show this in these industrial staffing buyers, these across the spectrum, a way that they can have real-time data in every market around the country. And that does not exist today. So we're excited to be going after those types of clients. Great.
Jan Bryan wants you to talk about competition and their reach in relation to yours.
Our competition is mostly indifference, to be honest with you. I think that our pursuit of these temporary staffing engagements that I just described with a lot of the big box retailers, that's the first time where somebody is in the business that is assigned to make sure that shifts are filled, that it could be, even in the case of Walmart uses temporary staffing in the back of the house, but also in the front of the house. The blue vests are also, a lot of times they come from temporary staffing firms, but there's always somebody assigned in those corporations to buy that labor, to procure that labor. And so by contrast, the business that we have been doing with restaurants, there's nobody really assigned. They might have an HR person, they might have a hiring manager, but they don't look at it the same way. They look at it as more of a fixture, where the others are the big box retailers are looking at it as a way to keep their lights on, to keep their business in motion. So it's a very different market for us, but we think that we're going to extract a lot of value from that market.
Ken Lowe wants to know, what's the biggest hurdle in your space? Is it getting clients, talent? What do you think?
Getting clients. The securing talent proved to be probably the easiest thing for us. I was shocked by how well our technology works in procuring labor at a crazy fast rate. Ours is really getting in front of the clients. It's a B2B industrial street sale, and there's no substitute for just having people hitting the street. And that's part of what we've been doing over the past couple of months. Our hope is that we're going to have an army of street salespeople, fully developed this next year, and it should take us to some great places. We're already seeing a big uptick in activity. So, but really, it's getting the clients.
Dominic J. wants you to talk about benefits for the employees or independents under your model, like insurance, sick vacation pay, and how will the employees make up for those expensive premiums?
Yeah, the way our platform works, it really is kind of built around the Affordable Care Act. The Affordable Care Act requires an employer like ours, of our size, to, even with part-time laborers, they need to be offered the opportunity to buy some minimal essential coverage. And they have that opportunity in our plan. I think the small plans go for like $50 a month. And so at a minimum, they're offered the opportunity to buy those, and they can buy their benefits all the way up. But they can secure benefits on our platform. They can also secure retirement benefits if they like. We have a 401k plan, so that if any of these employees have an interest in that, they have access to it. So access is, I think, the key here. Utilization, I will tell you, though, is low. Because, what I think people don't understand is a lot of the people that we serve, a lot of people that work on our platform are really living hand to mouth. They don't have some of those things. So, but we feel it's and it is our obligation. It's not just we feel, we have a duty, especially in the Affordable Care Act, to make those things available to them.
Tara Griffin asked, where do you see this going? What percentage of a company will be independent over the next 10 years, and how will that affect your growth rate on a percentage basis?
There's some things that are probably going to unfold over the next the coming months. I think that people should not lose sight of the fact that we spent a great deal of time over the past couple of years looking at M&A transactions. I think that you're going to see us continue to evaluate some of those internally. You're going to also probably see us pursue the building out of mega clients for ShiftPixy. That was our original intent. Those ambitions have not gone away. And I think our road ahead is actually, it's not going to, look, it's never been easy for us. We've had difficulty from our inception, but the market is now starting to understand what we do and its value. And we think that, predictable revenue growth over the next couple of years is absolutely on the horizon for us.
Great. Will wants to know, what's your cost to get a client, and how are you attracting the employees? Are they two separate acquisition costs?
They are two separate acquisition costs. On the employee acquisition side, we do we do a combination of there's like 4 different technologies that we deploy that automate that process to capture somebody's attention and then move them with essentially AI. We move them through an onboarding and connection process, kind of like a dating app. So our costs to bring people on board are very low there, and we're still trying to get a gauge on that, but it's remarkably very low. On the client acquisition side, that's probably our most expensive, because you should imagine that we have a national accounts team that is a big part of our overhead, that has to be on the street selling and constantly pursuing clients. So that process is not cheap, and that's where our biggest acquisition costs are.
Great. Brian Boyce says, does ShiftPixy have a plan to defeat the naked short selling? And is a squeeze possible?
Yeah, a squeeze is possible. I mean, the challenge has been the inefficiency of the markets. That was one of the reasons we're also, I think, if people have been following our story, we have another part of our business that's not related specifically to labor, that is our ShiftPixy Labs business. We're going to be dividending that out. We already have a record date for that. So the real issue is if you're short the stock, you're going to have to cover that dividend. So that's where we think a lot of the negative or the naked short selling that we've seen in the past, we think a lot of it's ratcheted down because of that dividend. So we think that when that dividend does hit, and it's our goal to have it done early next year, that that will have a big impact on and reverse that cycle.
And last question from Tommy Frazier. Do you have any feedback from the employees, excuse me, do you have any feedback from the employers as to how long the independents stay and the quality of their work and ethic?
Well, what happens in our platform today is that when people come in there on a temporary basis, they usually stay longer term. The whole goal for operators is to make sure that they have a full bench. Turnover is an inevitability in that industry. It always has been. And the whole goal is part of this rethinking of human capital. We get them to focus on the power of the platform to keep their shifts full. So that's what it's doing is acknowledging that people may not stick, they may not stay, but you don't have to worry about that. We'll keep your bench full. So that's really the way we've got our clients thinking about that.
Great. Well, Scott, this is a fascinating industry you're in. I've been a gig worker for a long time, so we need some solutions, and I'm sure the employers will help getting some quality workers. So thank you so much for your time, and we look forward to seeing you in 2023 with some updates.
That sounds great, Anna. Thank you for having me.
All right. Merry Christmas to you.
You too.
Okay, everyone, stay with us. We'll be right back.